Hey, everything went up. Everything went up. Everything? Let's see. Bitcoin bouncing around that 65,000K mark. We said it. All our numbers are there. They're in your trends journal. It's still in the positive and upward direction. Gold, $2,673 as we go on the air. And what was one of your top trends for 2024? Golden year for gold. Gold's up some 32% since we made that forecast.
In today's news recap, silver bar premiums rise to highest level in 9 months. Premiums on gold and silver coins and bars have been on the low side ever since the panic over the 2023 bank failures calmed down. Retail investors have been selling back silver at higher than normal levels over the past year, which had left local coin shops burdened with excessive inventory. That helped to keep premiums low, although in the past 3 days, there's been a substantial change in silver premiums. Matt Riley of EF Bullion reports that wholesale premiums for generic bars have risen from 10 cents to 50 cents in the past few days. A level, he says, premiums haven't reached in at least 9 months. We also talked last week about how Matt has been seeing silver coins and bars melted down into investment bars that are being used to meet industrial demand, which makes it even more interesting to see the change in premiums. Later this week, we'll examine whether the bulk of the retail selling has already occurred. But the premium increase is worth taking note of, as we've seen several periods since 2020 where there's been a surge in demand that's driven premiums higher for extended periods of time. In some cases, significantly higher, such as when American Silver Eagles were trading as high as $18 over spot in 2022. Keep in mind that a shortage of a particular retail product is different from an outright shortage of physical silver needed to make those products. But with the election, the Fed's rate cuts, and the BRICS meeting still on deck this year, it certainly wouldn't be a surprise to see another surge in premium levels. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
On the economy, everything's going up. Well, let's see. Brent crude selling for $71 a barrel. Why? Because the global economy is turning to shit. That's why. Even with the escalation of the Israel war, bombs away over Lebanon, oil prices are still way down because so too is the global economy. Get ready for dragflation. Declining economic growth and rising inflation. Cause, let's see. Central bank cuts key rates again. Oh, who's this? Central bank, Oh, Sweden. Oh, and so too did Switzerland. They're all cutting rates. The lower the rates go, the higher inflation goes. The higher inflation goes, the higher gold prices go. And now, of course, there's talk of the Fed cutting more and more. New home sales declined by 4.7% in August. The Census Bureau reported new single-family houses at a seasonally adjusted annual rate of 716,000, down 4.7 from an upwardly revised, however, 751,000. In July, economists polled, the lower than expected decrease is welcome for developers and builders, said one of these guys. So, home prices are still going up. Less people could afford them. Since the COVID war, median price of a home has gone up 50%, almost. This is how no one is again talking about the office building bust. Instead, they're hyping it up that things are getting better, as we've reported. They said, Amazon is forcing its workers to go back full time. But then we put the other data in, and only 3% of the tech companies are telling the people to go back to work full time. So there's going to be the office building bust that only the Trends Journal is talking about. And as the office buildings go bust, the banks go bust.
In today's news recap, silver hits 12-year high, chasing gold's record-breaking rally. Silver rose to its highest level in nearly 12 years on Thursday, riding the coattails of gold's rally to record peaks as interest rate cuts by major central banks fueled investment interest in precious metals. Silver is going to continue to rally over the coming quarters because of the consecutive rate cuts and as China's stimulus could continue for some time, said Amelia Xiaofu, head of commodity markets at Boki. She expects the price to move towards the $37 level. Silver, both a safe haven investment and a key material in industrial applications, has rallied more than 35% so far this year. One of the primary catalysts for the rally in silver has been gold because of their strong correlation. The gold to silver ratio has come down with silver's rally, Gupta said. The gold/silver ratio, which measures the number of silver ounces needed to buy an ounce of gold, indicates silver's value in relation to gold. It currently stands at around 82. The bulk of the remaining demand for silver has been driven by the industrial sector, with the metal's usage in photovoltaic products like solar panels nearly doubled over the prior year. Spot gold hit a record high of $2,685.42 earlier in the day. Bullion has risen more than 29% so far in 2024, smashing records several times, fueled by U.S. rate cut hopes, safe haven demand, and robust central bank buying. Now we'll show you the best clips of the latest interview, but first, subscribe and hit that notification bell so you don't miss any recaps. Enjoy the episode.
Usual perks lure tenants to New Jersey Tower. A fucking tower in Jersey. What exit? Then you got to read tiny little print way down near the end of the story. But with more than 900 million square feet of vacant space nationwide and remote work still weighing on office demand, more creditors are seizing properties that are in default on debt payments. Interest rates are still much higher than they were when tens of billions of dollars of office loans were made. Not a word in how this is going to crash. Nothing. And then we go on back how happy they are that this tower in Jersey is doing good. We are in the worst socioeconomic and geopolitical crisis in the history of the world, part one and part two. But let's not talk about it. Yep, it's only going to get much, much, much worse. AI demand spurs big tech scramble for clean energy. We're just mentioning this because it's not only clean energy, they're moving to places like Qatar and Saudi Arabia where they could get more regular energy. You're going to see a lot more moving into the Middle East where there's cheaper oil and more oil. But we don't say what we like, what we want, what we wish for in our analysis and forecasts. We say what is. We are recommending for the investors, this is a big on-trendpreneur opportunity because the use of energy is going to escalate as AI keeps growing. All the data is there. And how much it's soaking up energy. Oh, well, no, clean energy, folks. Oh, yeah. It's a joke. Yep. So we're just suggesting it that
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.